us to participate in AC production for both domestic and exports markets, as well as component supplier to enlarged manufacturing space. With these opportunities in hindsight, we are all geared up for the growth in domestic manufacturing of room air conditioners and its components, and would endeavor to grab majority of the market share. We believe this opportunity will further strengthen our presence in the domestic market and create a solid foothold for exports market too. We had recently announced 2 greenfield facilities, one in Supa region near Pune and other one in South India. We have completed acquisition of land for our new Supa facility near Pune and will be starting with the construction work soon. We expect to operationalize the Supa plant by Q4 of FY 2022. We are continuously investing in R&D for new product developments and better energy efficient products. We will be future ready with the product portfolio to cater to the increasing demand across segments. I will now take you through consolidated financial highlights. On the revenue side, our consolidated revenue for Q3 FY21 stood at rupees 765 crores as against rupees 788 crores in Q3 FY20, almost flattish as compared to last year same quarter. In Q3 FY21, room air conditioner segment contributed 54% of total revenues, while components and mobility application contributed 46% of the revenues. On the operating Ebitda side, for Q3 FY21, we witnessed an operating Ebitda of rupees 62 crores as against rupees 52 crores in Q3 FY20. Operating Ebitda margins for Q3 FY21 stood at 8.2% as compared to 6.7% in Q3 FY20. PAT for the quarter stood at rupees 28 crores as compared to rupees 25 crores in Q3 FY20. PAT margins for Q3 FY21 stood at 3.6% as compared to 3.1% in Q3 FY20. Now coming to standalone financial highlights of Amber. On the revenue side, our standalone revenue for Q3 FY21 stood at rupees 576 crores as against rupees 568 crores in Q3 FY20, almost flat as compared to last year's same quarter. Operating Ebitda for Q3 FY21, we witnessed an operating Ebitda of rupees 42 crores as against rupees 25 crores in Q3 FY20. Operating Ebitda margins for Q3 FY21 stood at 7.3% as compared to 4.4% in Q3 FY20. PAT for the quarter stood at rupees 18 crores as compared to rupees 12 crores in Q3 FY20. PAT margins for Q3 FY21 stood at 3.16% as compared to 2.03% in Q3 FY20. Now coming to Subsidiaries Financials, Sidwal, our mobility application subsidiary. Q3 FY21 revenues for Sidwal stood at 44 crores, operating Ebitda stood at rupees 9 crores, and margins stood at 21.4%. 9 months financial revenues for Sidwal stood at 120 crores with operating Ebitda of rupees 27 crores, with operating Ebitda margin at 22.5%. Our railway and metro business segment has been able to withstand all the challenges from COVID-19. We have been able to acquire new orders and strengthen our order book despite weak economic scenarios. Motor subsidiary PICL. Revenues for PICL stood at rupees 35 crore for Q3 FY21. Operating Ebitda stood at rupees 3 crore and operating Ebitda margins stood at 7.7%. We expect some margin expansion over the next 2 to 3 years' time. This is on the back of increase in product offerings and enhancement in our capabilities. We believe we will be able to cater domestic and export market in more meaningful way in the near future. Our electronic subsidiary ILJIN and Ever. For Q3 FY21, revenue for ILJIN stood at rupees 91 crores and in Ever stood at rupees 33 crores. Q3 FY21 operating Ebitda margin for ILJIN stood at 6.3% and Ever stood at 6.6%. 9-month FY21 revenue for ILJIN stood at 189 crores and Ever revenue at rupees 95 crores. 9 months FY21 operating EBITDA margin for ILJIN at 5.3% and forever at 3.8%. As the market is moving rapidly towards inverter ACs, we are confident of growing our revenue share from ILJIN and ever going forward. With the help of our in-house developed inverter PCB boards for RAC industry, we have added 4 new customers in ILJIN and few more customers are in the proposal of approval. To conclude, I would like to reiterate that our constant endeavor would be to increase penetration and increase our wallet share in the existing customers, continuously add new customers, create a foothold in the exports market, and enhance our products with new technologies by focusing on R&D. With this, I open the floor for discussion.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sankur from HDFC Life. Please go ahead.
Yeah. Hi, sir. Good morning. Thanks for your time. So a couple of bookkeeping questions first. One, if you could tell us the AC volumes which was sold during the quarter, Q321 and last year, and if possible, the split into IDU, ODUs, and Windows.
So the total volumes was almost flattish. It was 5,43,000 units as compared to 5,72,000 last year.
Okay. And any split you can say, sir, or is that something right? I know you've not been doing that, but
yeah, we actually avoid telling the splits.
Okay. And secondly, sir, again on the standalone side, the split between aircon and components, if possible, you given that for console?
So components has contributed total 163 crores and room ACs have contributed 412 crores.
Perfect. Okay, that's good to know. So secondly, also on the gross and net debt numbers, and if possible, the debtors number as well on the balance sheet.
So console net. Hi, this is Sudhir. So console net debt number is 263 crores as on 31st December 2020, and last year it was 343 crores on a net debt level. And if I talk about the gross debt level, so gross debt is around 471 crores this year, and last year it was around 407 crores.
Okay, and if possible, the debtor number?
So just a sec. So debtors are at around 650 odd crores. As against last year, it was around 550 odd crores.
Perfect. Okay. And just one question to Jasbir, sir. So now that, from your commentary, it seems like the inventory is largely kind of consumed. When we look at some of the listed players, their numbers also have been fairly strong, at least on the primaries. So fair to assume that as we get into Q4, of course, we also have a lower base from last year. We should start seeing strong growth come by on the room AC side.
The sentiment overall is very positive. Customers are bullish now, given the Q3 results of primary sales, as you rightly pointed out. So we are expecting a decent growth in Q4.
Yeah. Okay, great. Okay, sir, that's all from my side, and thank you so much.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Praveen Sahai from Edelweiss Financial Services. Please go ahead.
Yeah, thank you for taking my question. Sir, as you had referred the last call, that the inventory level in the channel were reached to a pre-COVID level of 5 to 6 lakhs. What's the situation right now? Because now we are past within January. So how is the situation in the channel inventory level?
Well, there are two point of view here. One is that many companies, brands have been able to push a lot of inventory into the primary sales due to the expected cost increases of the product due to commodity and commodity impacts. So their inventory level is very less because they've been pushed quite a bit. And some of the brands who did not push, they have inventory level, but they are at a pre-COVID level, the standard inventory levels, which used to be earlier, in this kind of a scenario of December or January.
Okay. And secondly, as you had mentioned regarding the commodity prices, so this time we had seen a good improvement in the gross margin. So what we are, is it possible to sustain these gross margin, or commodity price inflation is going to give some pressure on that?
Well, I mean, of course, we have been able to pass on the increases on a quarterly lag basis. And one prime reason, because the margin expansion is basically two factors to that. One is the change in the product mix, which will be, of course, looks to be sustainable level. But another factor is that we had old inventories lying up with us, which were at a lesser cost. So, moving forward, we have got increases. Whatever increase in the commodity has happened, we have been able to successfully pass on that to our customers. So we expect this price variation clause to be applicable in future also.
Okay. And lastly, sir, on your Pune expansion plan, how big the facility and any details of that can you give me?
Yeah, we have bought 10-acre land in Supa region. This is adjoining plot to Toshiba manufacturing plant and Carrier Media plant. In this 10-acre facility, we will be constructing first about 2.5 lakh square feet area, which the construction will start soon. Maps are getting ready and approvals are getting in place. After that, we will commence the production. Production is expected to start by Q4 or FY22.
Any number on the unit, how much you are going to produce? Or?
We will be having a facility of 1 million units to start with, and some components also directly to be supplied to customers.
Okay. And whether you are going to serve this PCIL BLDC motors there as well, or?
Yeah, PICL will directly serve to the customers, but not through Pune factory.
Okay. Thank you, sir. I'll come back in the queue.
Thank you. The next question is from the line of Madhav Marda from Fidelity. Please go ahead.
So good morning. Thank you so much for your time. I had a couple of questions. The first one was, any updates from your side on the exports? Like any movement that has happened in terms of the samples that you sent or anything of that sort?
Yeah, good morning, Madhav. On exports, as I told in the last call also, that there are two components part to export market. One is our component facility where PICL has been able to crack orders, and that is moving positively. In fact, the margin expansion in PICL is also being contributed by some export sales. And on the finished goods side, this year, FY21, we will be calendar year FY21, we will be submitting our samples because the US markets have a different type of construction required for air conditioners. They don't use side throw window air conditioners. They do use top throw window air conditioners, and they don't have a high wall mounted splits. They have a very different PTEC unit. So that is under construction right now. By I think March or April, we will be submitting our samples, and this calendar year 21 is going to be validation period, and to next year is when we are expecting some orders to flow in for room air conditioners.
Okay, got it. And the other more near-term question was this commodity cost inflation which has happened. Could you give us a sense in terms of how it could impact room air conditioner demand in India for this season? Could there be like a big price elasticity which can play out?
Well, the commodity has shot off the roof, and I think at least about 5 to 7% range of cost increase on the finished goods side will be impacted. It is still to be seen. Sentiments are very positive. Not a very big inventory lying in the system right now. It depends on how good or bad the season would be. In anticipation of a good season, I think that industry should be able to grab. But there has been incidents in the past when any increases, sharp, sudden increases of 5 to 7%, markets have taken about a year time to digest this. So it's like a wait and watch, scene right now. So let's see how it goes up. But yes, there is some resistance by the retailers, which I heard from brands that they're not happy with the situation. But then nothing can be done about it. It's not only for air conditioner segment, it is completely to all other segments like auto and construction, other things also.
So in general, in this, when these price increases happen, do consumers tend to delay their decision by a year to purchase an AC? Does something like that happen? I'm just trying to understand what happens.
It's difficult to say actually. If it is a very good summers, or I would say a scorching heat kind of a scenario, then persons can't wait. It is about impact of 1,500 to 2,000 rupees per air conditioner will not matter. But for someone who's planning to maybe replace his ACs, or someone who's planning to shift from cooler on a EMI kind of a SIM, he may defer it. So it will be a mix and match of both.
Understood. Okay. All right, I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Aman Fenster from Newport Asia. Please go ahead.
Yeah, hi, Jaspir. Thanks for taking my question. I'm just wondering about if you can comment on the current market share that you have and market share potential, given that the new plant is coming up, and you also said that you want to try to take the lion's share of the opportunity that these new policies will bring about. So maybe you can talk about what the potential is for market share going forward.
Good morning, Aman. So basically right now we are at 24% of the room AC market, and in the ODM space also we have quite a substantial share of almost 70%. The gas charging facility, as I explained, that we have added 6 new customers. So the opportunity, I think we will be able to grab the majority part of it to begin in the phase 1. Now in phase 2, there could be 2 possibilities. One is that larger companies may think of setting up their own facilities, where we are already gearing up to serve component business to them. And second one is where they are seeking for ODM supplies. Then there is where we see a long-term contracts coming in for Amber. So in both the scenarios, we will come to know about the strategies largely after the season now, by July or August, where we will be able to move in tandem with them. But we are looking forward to grab a majority share in both the opportunities.
And then the second question is just about the export opportunity, because that, it's early days for that. So does that take like 2 years to ramp or longer? What sort of, what will make India competitive in supplying globally, besides the China plus one strategy that some OEMs might undertake?
So there are, in component side, it takes about 18 months to 24 months for getting the validation done, because, the products like heat exchangers, inverter PCB boards or motors are such that they are reliability components. The final product's performance is dependent on the functionality of these components. So after crossing the validation period, then it is a slow growth of share of business increase. So that process has started. So with some of the customers in PICL subsidiary, we have already crossed that validation period, and now the initial orders have started coming in. and I believe that in next 2 to 3 years from now on, the share of business will also start improving. On the finished goods side, the PLI scheme will play a very important role, because that is where we are going to get incentives to a tune of 5 to 6% for next 5 years. So that will make us more viable. On the other side, as I explained, that we were not ready with the right product mix for those markets. Now within this year, calendar year 21, we will be ready with the product mix, and next year onwards we expect that PLI will also be notified, and it will be a right timing for the company to start getting eligible and more competitive for exports.
Great, thank you.
Thank you. The next question is from the line of Dhruv Jain from Ambit Capital. Please go ahead. Mr. Dhruv Jain, may we request you to please unmute your line if muted from your handset. As there is no response from the line, we'll move to the next question.
Yeah, hello. Can you hear me?
Yes, sir, we can.
Sir, hi. Thanks for taking my question. Sir, I had a question with respect to the gas charging opportunity that you spoke about. Sir, what would be the volumes, etc., for volumes and margins for this gas charging business, and by when do you expect manufacturing from the OEMs to actually move to India? So, if you could just walk us through the timeline for that.
So in phase 1, the gas charging, any import which was earlier happening for almost about 2 million units, that has already started shifting, because companies have started gearing up. Earlier they were not expecting that Indian government will come up with such kind of ban or barrier, non-tariff barrier, but it has happened. So quickly, because it was announced just at a cusp of the season, there was no, I would say, nothing was remaining apart from getting it gas charged. So that has already started. Now, looking into the longevity of this notification, companies have started exploring different views. I think by August or September, things will be very clear which customer is looking for long-term manufacturing contracts with ODMs and which one would like to go for their own units. But yes, I mean, as far as Amber is concerned, we would like to take advantage of both the situations.
Okay. And sir, the second question was with respect to PLI scheme. We know that the government has announced it, but sir, the brands have also been putting up capex. They've been talking about putting up capex. So in terms of competition, how do you see the brands manufacturing affecting Amber?
So, well, there are total 16 manufacturers in the country at present, and 16 manufacturers catering to about a 7 million market. So on one side, markets are poised to grow at about 15 to 16% CAGR. And on the other side, brands who have the manufacturing facilities already existing, they would certainly like to take advantage of PLI and continue to manufacture in-house and take advantage of PLI at the same time. But what will happen is that most of the brands which we are seeing who are manufacturers themselves, and specifically multinational companies, they are actually thinking to shift the geographies for the exports market to be catered from Indian operations. So there are some companies, multinational companies who have operations in India for which Amber is already supplying components to. They are talking of big numbers to shift exports to here in similar lines to what has happened in mobile phones, where many of companies, larger companies, have shifted their geographies out of different parts of world to India for catering and taking advantage of PLI scheme. So that is one shift which we are seeing, which will happen, and they will all continue to manufacture for exports and for domestic manufacturing, where Amber will benefit by supplying components to them. And on the other side, directly on the competition side, yes, we are seeing some news that companies, brands themselves are planning to come into OEM or ODM, outsourcing model. But then it will create a conflict for them being a brand and supplying to Indian market. Let's see how it poised out to be. But yes, as far as Amber is concerned, with our geographical spread, having already 15 plants plus 2 new facilities coming up, we will be at a very strong foothold to cater to all geographies as well as in the all product mix category.
Thanks, sir. Thank you. That's it from my side.
Thank you. The next question is from the line of Hiren Trivedi from Axis Securities. Please go ahead.
Thanks for the opportunity. One small question is on the Sidwal order book and the new orders during the quarter, and what has been the performance of Sidwal during the quarter. If you can just help me with that, please.
So Sidwal has actually grabbed 2 or 3 new orders worth about 120 odd crores within this quarter. And there was a sluggishness in Sidwal on sales side because of slow uptake from railway side. I think post-COVID level, all the railway factories have had a very slow uptake on the production side, and hence the air conditioner requirement was also slow. But no, there is no change in the share of business, and there is no cancellations of any orders. And we are growing in the order book. In fact, the metro division of Sidwal is doing pretty well, where we grabbed 2 new orders from DMRC and 1 more metro division for our air conditioners supplies.
That's fine. What would be the current order book be, if you could help with that?
So current order book as we speak is close to about 400 crores, which will be supplied in 2 financial years.
Fine. That helps. Thank you.
Thank you. The next question is from the line of Hitesh Tang from ICICI Direct. Please go ahead.
Hello. Hello. Hi, sir. First of all, congratulations on a very good state of recovery, sir. Sir, I have 2 questions. First of all, sir, you talked about your new client additions, around 6 clients you have added during this week, which is very good. So I just wanted to know whether these clients are going to add revenue from the Q4 onwards, or this client addition would start contributing revenue from the next financial year on.
So these 6 new clients which have been added is in the gas charging one portion, where it is primarily not exactly sales of manufactured air conditioners. It is just the gas charging part, where it will be a sort of a job work kind of a thing. So the production has already started. We are glad to announce that since December we've started it, and now January and February we are picking up from our Pune facilities and Jhajjar facilities. Both of the units are catering for the gas charging part.
Okay. Okay. And sir, one question from this is bookkeeping question. So can you please give us some YY numbers for your subsidiaries, the Q3FY20 numbers, like you shared for Q3FY21 numbers?
For the subsidiaries you are wanting?
Yeah, subsidiaries.
For Sidwal. Yeah, Hitesh. If I talk about for Sidwal only, so last year Q3 we did around 69 crores with a operating Ebitda margin of 18.2 CR.
Mm-hmm.
And in Ever it was 59 crores turnover with the operating Ebitda of 1.8 crores.
Mm-hmm.
And Ilgin it was 66 crores with an operating margin of 4.28 crores. And PICL, it was 43 crores with an operating margin of 3 crores.
Okay. Thanks. Sir, last question, if I may squeeze in one of the last things. Sir, Jasbir sir, this is from you. Sir, what could surprise you, positive or negative, in the coming budget, sir? I mean, one positive point or one negative point, if you can say, that would be very helpful.
Well, I think we are expecting that some bit of announcement on the phase manufacturing program, which was earlier talked about in various media reports also, that is pending. So air conditioner industry actually requested for gas ban, refrigerant filled air conditioner ban, which has happened. Then we also requested for PLI, which is under the way. And third one request was for the phase manufacturing program, where gradually expected, custom duty increases on the component side and on finished good side. So that could be expected. I mean, our expectation is that we may hear something today. And on the negative side is, yes, if there is a larger cess which comes up, which hits a COVID cess or a big ticket, which actually goes negative for the consumer sentiments, then definitely that can be a negative.
Okay, that's all from my side, sir. If I have more questions, I will come in the queue. Thank you very much, sir.
Thank you. Thank you.
Thank you. The next question is from the line of Praveen Swaminathan from Spark Capital. Please go ahead.
Hi, sir. Good morning. Thanks for taking my question. My first question is with respect to the two new facilities which are coming in. Is there a chance that they are likely to come under the PLI scheme? And if you can give some more details on the PLI scheme, we hear that close to 3,000 crores would be for the manufacturing and 2,000 crores for the components, etc. Why can't Amber set up a, say, compressor facility also, given the incentives which are given? If you can give your broad thought process, it would be great, sir.
Both the facilities, yes, will be able to take advantage of PLI scheme, and we are hearing that the structure is still under formulation at DTIIT. We expect that in February month we should have some draft guidelines coming out officially, and then it will go for the notification. So from 1st April we are expecting the notification, or maybe by 15th of April. Yes, both the plants will be eligible, should be eligible for PLI under PLI scheme, and on the component side also, our subsidiaries are also gearing up to take advantage of PLI scheme, because right now it is very difficult to say whether 2,000 crore will be for components or 3,000 unless the real structure and guidelines comes into place.
Got it, sir. And is there any plan to set up a compressor facility? I mean, we are the largest kind of manufacturer here, and compressor constitutes close to 30-35% of the value, with 5-6% advantage which is being given. Is there any thoughts on that?
Well, to be honest, I mean, we actually are waiting for the PLI to come out, and after that we will decide. It could be a possibility that we may go in for some kind of a joint venture with some customer or maybe some compressor manufacturer if it comes to putting up a compressor plant.
Got it, sir. Got it. And my next question is with respect to HVAC space, sir. So how much have we forayed into it, and what is the opportunity there? What percentage of our revenue is coming from the HVAC space, if you can give a broad thought process?
So room AC is also part of HVAC. That is contributing about 54% in the revenues, and we have recently started our commercial air conditioner line with 3.5 and 4.5 ton units. That has already started, and we are building up new products to add to go to about 17 tons. In next 2 years, we will be coming up with about 22 more products in that category, catering to the complete commercial and industrial applications. That is one part. On the other side, on the HVAC, mobility applications is contributing about 5.5% in the revenue now, and it's also moving positive.
Got it. And this commercial refrigeration, so can it be a big number to our top line? I mean, so basically, and do we need any capex for that? Because it is in the 3.5, 4 ton and up to 17 ton you had mentioned, right? So, and that's a pretty sizable market. So, can it be a big number to our revenue?
Yeah, so we are the first company which has started offering ODM solutions in this category. So I think customers are wanting ODM who can completely come up with a complete product range. So once the complete product range is completed within next 2 years, then it is going to be a good opportunity. The space is very interesting. And by that time, right now what is happening is because of the COVID situation, I think the commercial buildings and other part have taken a toss. So probably that is a little bit going on the slower side. But in next 2 years, at one side, we will be ready with the product basket, complete product basket to be catered, and on the other side, the markets will come back to normalized level in the commercial space also. So I think that will be right timing for us.
Got it, sir. And my final question is with respect to exports. Exports today, so what portion of our revenue, and over a 2 to 3 year period, how much is it likely to be?
Very difficult to forecast what would be the revenue contribution in the whole balance sheet moving forward. But what we can say is that we are very serious, and teams are getting very positive responses from the customers. Exports moving forward in mid to long term basis will contribute significantly in the balance sheet.
Currently, how much it would be, sir? Currently,
it is less than a percentage. It's very minuscule right now.
Okay, sir. Thanks.
Thank you. The next question is from the line of Keyur Pandya from ICICI Prudential Life Insurance. Please go ahead.
Hello.
Hi, Keyur.
Hello, sir. Hi. So first question, just to get sense, how has been the momentum in January? If you can throw some more light, as you used to mention, say, about October and November. So how is it tracking year over year as far as volumes are concerned? That is first. And second question is on PICL. I think 30% is export for PICL as of now. So based on, say, export orders, how do you see this trajectory changing in, say, near term, say by FY22 or 23? That is first two questions. Thank you.
So January has been pretty positive, and we expect Q4 also to be positive. I think moving in line to the positive sentiments which are right now in the country as far as consumerism is concerned. And on PICL side, we expect, we also, I think, confirmed it last call also, that we are expecting to double our revenues in PICL in next 2 to 3 financial years. We are very much on track. And right now, exports have started contributing about 20% of the PICL revenue. So we expect that this percentage to go up to about 30-35 as we move ahead in next 2 to 3 years.
Isn't it 30 already, or so?
It keeps on changing actually with the product mix. Sometimes it is 20, sometimes it is 30, depending on this.
Okay. Sir, just two follow-ups. First is on, so whatever price hikes we have taken, say in Q4, with the current situation, it covers all the inflation, or we can expect any margin pressure on that? And whatever margin improvement that we have seen year over year, any specific reason that you can assign for that, and how sustainable it is?
Well, we are working on all the fronts. There has been some bit of cost rationalization also during the pandemic, which will continue. And as far as the price variation clause is applicable in all the costing front, and we have been able to pass on entirely whatever the costing has been done. There were some customers where there was a lot of resistance seen while increasing, and it did not happen in the very first day of January. It happened by mid of January, but it has happened now. So in Q4, I think the whole completely whatever impact of commodity has impacted us has been passed on.
Okay, thank you. And so just last question on the LG and Ever side. So more color on how the PCB development is going on, any client addition, or how the trajectory you are seeing for ramp up on the client addition, and including the non-AC portion, growing for LG and Ever. I think it's a large portion for us, right, in LG and Ever?
Yeah, LG and Ever is moving positive. You must have seen that Ever has come back very strongly in the margins also from last year 3.5% to almost 6.5% now. Ever and LG are now parallel to each other in terms of margins because of the product mix change and because of our ODM products gearing up. We have added larger customers. In fact, Voltas has been added in LG and Ever. Blue Star is there now, and it's moving forward positive. So we have reached to a mass production scale, and a few more customers are in touch with LG, where validation is happening right now. And as the validation period will finish, the mass production will start.
And this Voltas Blue Star, you already crossed that period, so it is commercial orders?
These are commercial orders, yes.
Mr. Pandya, does it answer your question?
Yes. I'm done. Thank you.
Thank you. The next question is from the line of Manish Agarwal from Edelweiss. Please go ahead.
Hi. Good morning, sir. Two questions from my end. Firstly, sir, like couple of brands which have reported numbers have shown very good growth in their AC division, specifically like Havels and Blue Star. So just some color on our growth has not been that great. I understand there would have been some pickup towards December because of the imminent price hike. But is there something else that we should be looking at? And sir, also the capex guidance for 21, 22, 23 that we are looking at for these two plants.
So we are actually at the last leg of the supply chain. When pandemic hit, there was almost an inventory level of 2.4 million in the market. So first that got consumed, and then the inventories which were lying at customers' end that started getting consumed, and now we've started getting orders. So Q3 became flattish. That was very positive for us. In fact, Q3 we saw that brands did very positive, so that means their inventory has started getting liquidated. And I believe that now we will move in tandem with the industry growth, whatever happens. Your second question was regarding?
Capex, sir.
Capex, yeah. So in the two plants, both Pune and we have earmarked 300 crores to be invested, out of which the land portion has been bought. So close to about 15 odd crores has already been done, and remaining will now we'll start it, I think, in this financial year and next financial year, plus next financial year. It will be about 300 crore will be invested in these two plants.
Okay, sir. So, sir, basically, follow up from the first question. So, basically, Q4 then will be a very good quarter for us, right? If the channel inventory plus the brand inventory is normalized, Q4 should be a good quarter because we have a good lower base and it's pre-summer, and then the inventory is in our favor for that matter.
Yeah, all things are looking positive. Sentiments are positive. Winters are not looking to be elongated this year, but again, the only deterrent which can happen is the price increase, how the markets accept the price increase of 5 to 7% on the finished goods side. So that is yet to be seen.
Okay. Thank you. That's all.
Thank you. The next question is from the line of Nirav Vasa from Anand Rathi Shares and Stock. Please go ahead.
Hello, sir, and thank you very much for the opportunity.
Hi, Nirav.
Just wanted to check, most of my queries have been answered. Wanted to check on the status of the new plant that we intend to set up in South India. So any finalizations on that, locations or anything on that?
Well, actually, I'm traveling tomorrow to finalize the land piece. So we'll, I think we are going for City City as a location for again 10 acres facility. So that's how we will proceed in South India.
Thank you very much, sir.
Thank you. The next question is from the line of Amber Singhania from Asian Market Securities. Please go ahead.
Hi, sir. Thanks for taking my question.
Hi, Amber.
Can you hear me?
Yeah, you're audible.
Yeah. Sir, my first question is towards the PLI. As we said that our new plants as well as the subsidiaries will also be eligible. So, is there any restriction in terms of number of licenses similar to what we have seen in mobile side, and what kind of timeline we are seeing from the government side to get it finalized, sir? That's my first question.
So on component side, I don't think so there should be some restrictions, because that is the prime objective of PLI, to create a component ecosystem. Local value add in our sector today is only 25%. And PLI will address the larger part of that, this 25 should go to 75% in next 5 years' time. After all the kind of components which are getting imported should get started manufacturing. But it is still, not clear under how many will they restrict to number of licenses until unless the guidelines comes. Or there could be some threshold limits where somebody may not be eligible or somebody can be eligible. So it is yet to be seen. But I think as far as Amber is concerned, subsidiaries are concerned, we should be able to participate in all the categories, whether components and finished goods both.
Any timeline on that?
What we hear from different media reports and from the departments is that right now it is under formulation. In February, they will come up with some draft guidelines, and then it will go for notification, which may take another 2 months' time.
And my second question is related to the same, sir. When we will see PLI getting rolled out, most of the brands will also participate in that, what we understand. Is it fair to understand that going forward post PLI, our room AC shares will come down and the component will go up to cater to those brands, because definitely they will be going for more in-house manufacturing of the finished goods?
So it can't be forecasted that way. As I explained earlier, I think this question was asked previously also, that there are 16 manufacturers in India, and out of which 11 are the big brands. So the bigger brands will continue to manufacture on their own, where Amber is supplying components. And because of our geographical presence spread and the product mix spread, the ODM part will also be growing. So we don't see any larger shifts there, but in case that happens, Amber is well poised to serve in components also. And I would say that we are having better margins in components. So, there could be some margin expansion if that happens, what you are saying.
Okay. And lastly, sir, on the gas charging side, you mentioned that you are putting up the facility for gas charging also. If you can just share some color about how much capex you will be incurring on that, and what kind of margins and size of opportunity this would be.
So there is hardly any capex going for gas charging pertaining to only gas charging facility, because these are the only gas charging lines, and they are fungible. They can be used in any of the plants later on. So Jhajjar already had lines, Pune already had lines. We've just added 2 new lines looking into the now requirement for the season, and not a very big capex which will be going on for that.
And opportunity size and margin in this?
We can't comment on the margin right now, because all customers are at different margins, looking into the volume and looking into the timelines and everything. But yes, I mean, I would say it's pretty positive as to what we are doing right now.
Surely. Fine, sir. That's all from my side. Thank you.
Thank you. The next question is from the line of Nitin Bhasin from Ambit Capital. Please go ahead.
Good morning, Jasbir.
Morning, Nitin.
Two, 3 questions. One is the compressor sales for the first 9 months, and where are we in terms of making some sort of a change in payment or time periods in which the customers pay you for compressors, because that actually elongates your debtor cycle.
No, compressors, Nitin, are supplied by customers to us. So we pay them when we get paid. So that's been going on for quite a long time, and that is what is continued now also.
Okay.
Yeah. So
what was the compressor sales in the 9 months, roughly?
Compressor sales we don't track, because it is completely bought by customers themselves.
Okay.
But what we track is the imports. So I think imports has been in line with the compressors. So on for us, our compressor purchase was about 148 crores from customers.
Okay. So if you were to set up a compressor joint venture, as you mentioned, at some point in time in the future, any sense on what kind of a capex would it be required for, let's say, even a 50-50 joint venture if you were to do, and how much time will it take? You must have done some sort of a pro forma study analysis, and how much time will it take to actually produce 1 year, 2 year, 3 years?
Well, if it comes with a partner who's ready to shift their lines, then it will not take more than a year. But otherwise, if you have to put up a greenfield facility starting from scratch, and it will take at least 18 months to 24 months to set up a compressor facility. The capex requirement for compressor for about 2 million compressor facility is close to about 250 odd crores.
Okay. And presently, India's all compressors are by the Chinese, is it? And the Japanese. So if you could help us understand that Gree, Idea, etc., and Highly, they're anyway on their own right now in one way or the other. Which are the other players which can potentially be your joint venture partners? Let's hypothetically.
It will be very difficult to comment on this question, Nitin, because we have it's like an NDA situation which is signed before you talk on that. But yes, I can give you a color on how many manufacturers in the world. There are about 8-9 manufacturers in the world.
Yes.
Of compressors, largely of compressors, like Panasonic manufacture compressor on their own, LG does it. Then we have Highly, which already is in India, which is a Chinese company. GMCC, which is the largest compressor company of room AC in the world,
Yes.
that has already come in India. Then Gree manufactures compressor, Ricky manufactures compressors. So these are the Toshiba manufactures compressors. So these are compressor manufacturers where you can do some kind of alliance if we feel that we should come into the compressor plant.
And already Highly, GMCC and Gree have plans or are present in India.
No, only GMCC and Highly is present in India. In fact, the GMCC plant was expected to be operationalized, but because of this pandemic and visa restrictions, I think that is on hold right now. So currently there is only one manufacturer which is operational, which is Highly.
Okay. The last question would be, any break into any other consumer durable. I remember 1 or 2 quarters back you were talking about how your dependence on washing machines, etc., for through motors or for that matter even LG Never is and possibly could increase. Any sense on any developments around that in new other consumer durables?
So we've actually been given a go ahead by Voltas Beko for refrigerator and washing machine components. Then as we have bought Supa plant is going to be next door to Toshiba facility. So there also we will be catering to refrigerator and washing machine components also in future. And in motors, yes, we have started the washing machine motors, but we are getting resistance on the costing front because right now there is a disability in the price point. There is 2 customers who are ready to handhold us for next 2-3 years. And if PMPs are announced, that will be positive for the motor plant. Or even in PLI also we will be able to then crack into those kind of things.
In washing machine and refrigerator, what sort of a per unit cost opportunity do you have today as per your capabilities?
See, in washing machine, we are supplying washing machine tub assemblies and inverter PCB boards, and also some of the injection molding components.
Yeah.
So in all put together, if we see, I think we can, and motor contributes to a pretty strong bill of material part. So I think we can cater to at least 25% of what washing machine manufacturing.
Okay. And refrigerator?
Refrigerator, again, we are into sheet metal, we are into case liners, door liner and case liners, vacuum foaming, and then we are into electronics. So
Yes.
3 categories of products which we are into, again in tune of 20 to 25%.
And right now, any dependence on refrigerators? Anything?
So if you see the revenue mix, almost about 20% of revenue is coming from non-AC components, which are largely washing machine and refrigerator and microwave ovens.
Okay. And today, a client, any 1 or 2, like is it Godrej, is it, who is it today?
Refrigerator, we are catering to LG, we are catering to Godrej, and we are catering to, sometimes we cater to Whirlpool also for the extruded sheets. We are exporting our extruded sheets also. And then on washing machine, we have clients where we are, IFB is our client, Panasonic is our client. Then now Voltas Beko has approved us, and LG is also working with us in washing machine space.
And this is largely semi-automatic washing machines, am I right?
No, electronics goes for both semi-automatic and top loading, both.
The last one from me, in terms of tomorrow, later, what stops you now, because having so much of dependence and clients also, why would you not get into, let's say, a washing machine fully, what you're doing with the ACs right now? Or do you just want to not do it for the next 2-3 years because you want to focus on AC?
No, I think we have quite a good opportunities coming into our own space where we are right now, where we belong to. So that is going to be a very interesting space in at least for next 3-4 years. So we want to be very focused. We don't want to get into a space where we need to just test waters, but we want to be more aggressive in our own space, giving solutions of comfort cooling products wherever a human being needs, starting from households to offices to mobility applications and to industrial and commercial applications, everything.
Great. Thanks, SB, for this. Thank you.
Thanks, Nitin.
Thank you. The next question is from the line of Lokesh Garg from Credit Suisse. Please go ahead.
Yeah. Hi, sir. Good morning. Just wanted to ask you in terms of, and some part of this question already got discussed, which is LG Ever capabilities in terms of PCB is quite generic. Apart from obviously having your own ODM solution for inverter boards for ACs, what are other product categories where these PCBs are going and can go if you take an outlook of 2 to 3 years, and where are we in that progress subjectively and in terms of a milestone?
We've received a couple of inquiries from networking equipment, from CCTV markets, industry, and from fan industry, because fan industry is now moving towards inverter fans. So we are looking to address those within Engine without doing any capex.
And what is the proportion of your own designed PCB board that goes today?
We just started that. It took us about 2 years to develop our own PCB, and we've just done a mass production. So I think we will be less than 10% of our revenue right now as far as ODM is concerned. But next 2 to 3 years time, we should be about 50-50.
Okay. And you started a new type of motor, I think, Nemo motors or IC motors in PICL. Any success that you have achieved in terms of some customer acceptance milestones? What is the market opportunity, either looking at just India for both of these type motors combined together?
We were not present into indoor motors. That has started, and indoor motor was largely imported. So we've come up with one model right now, and another 3 models are getting developed. By June, those will also get developed, and then that is where we see BLDC motors playing a big role in the revenue of PICL also.
Okay, sure. Thanks, sir.
Thank you. The next question is from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good morning, sir.
Morning, Aditya.
Sorry, to just hop on the PLI scheme. If the scheme is in a similar form as mobile phones, these incentives may be available on incremental revenues. Now, Amber already has a very strong base with such high market share and revenues. Does that mean that it will get incentives not on the existing revenues, but only on incremental revenues that it can generate? And from that perspective, from a brand owner's perspective or from a customer's perspective, they may get incentives only on a very small proportion of overall business that they give to Amber. Is that how it may work out?
So it's difficult to say until guidelines are not published, Aditya. But yes, you are rightly saying that it will be for eligibility, you will have to bring in incremental investments. For incentives, you will get on incremental sales. Now, until unless the structure is formulated and disclosed by DPIIT, I would not like to comment. But yes, from incremental sale perspective, they will take a pragmatic view on the investments as well as on the incremental sales. But we should be able to generally grab the share because of the ODM category. There could be a shift also from some of the players who may not do capex themselves. They may adapt outsourcing model and take advantage of PLI.
Sure, understood. And sir, secondly, on the export opportunity, while you have given a very good qualitative flavor on how it may pan out, anything that you can share, how would you like the export opportunity to pan out over the next 3 years? Can it contribute to like 30% of overall revenues of the company, or will it be a slower progress?
Well, we are taking baby steps in exports. We just started last year, and I think we have done good. We've started cracking customers, and some validation periods are getting over and getting good traction. So, to give a comment that how much it will contribute on a balance sheet is very difficult to forecast at this moment of time. But yes, once we have now global aspirations. If we want that, now government is also supporting us in PLI terms. So we should be able to take advantage of that. and we expect that at least in next 4 to 5 years time, somewhere about 10 to 15% revenue should be contributed by exports.
Understood, sir. That's very helpful. Thank you so much.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question for today. I would now like to hand the conference over to Mr. Jasbir Singh for closing comments.
With the growth opportunities we foresee on the domestic and export front along with the government support, we believe we are well positioned to capitalize on this opportunity. Thank you everyone for joining us. I hope we have been able to answer to all of your queries. In case you still further require any details, you may please contact us or our investor relations advisors, SGA, Strategic Growth Advisors. Thank you very much and have a good day ahead.
Thank you. On behalf of Amber Enterprises India Limited, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.